So when we talk about quant investing, what we're really talking about is rules-based systematic trading strategies. So equities are actually a really natural place for quant investors. They've been around for decades. It's one of the original places where quants were. And it kind of makes sense because corporates, there's thousands of different companies and there is a huge wealth of data. So both of these things are great for quant investors. Fundamentally, quantitative investing for equities is just looking through the data, finding some repeatable edge and trying to harvest that edge.
So if we contrast with corporate bond trading has been around in various forms for decades, of course, especially here at PIMCO over around 50 years. But quantitative investing in credit is a newer phenomenon. For a long time, liquidity, availability of data, these were sort of challenges that made credit investing from a quant perspective more difficult. That really started to change about 5 years ago, and we're now seeing a very sort of interesting space develop that we think is exciting. There's a lot of potential for quant techniques to be applied really in a new asset class. And to begin with, that started out trying to borrow a lot of the ideas from the equity world, similar sort of factors, financial data, price analysis, and that continues. So credit has unique challenges, but because it is a little bit harder to access and is newer, and the data's a little bit more difficult to find and to clean, that all in turn leads to what we think are more opportunities. So we're very excited about the potential for quant in the credit world. So there's actually a lot of exciting stuff in terms of research going on in quant credit. We have many projects underway. Again, being in a slightly newer space, with data that's really only just starting to become available in large amounts in the last few years. There's really a very interesting spectrum of research that we can look at. So this can be everything from broadening our universe, looking at different industries, different regions, and things like also trading data. We're doing a lot of work in that space, as well as sort of refining our signals and models to sort of build in all the latest thinking.
So I think in equities and same in credit, one of the things we're doing which is really quite interesting is looking not just at the universe as a whole, but trying to dive down into sector-specific signals. And that's really interesting from a quant perspective because you give up breadth, so there are fewer names, but then you're also feeding in additional information. I think it's a rich area, especially working with the discretionary managers. What we're trying to do in quant is we're trying to take some of their insights, which are specific to sectors or small clusters of names, and quantify them, systematize the ideas, and I think that's exciting. And I think what also is really exciting is what Graham mentioned, is sort of the interplay between the two asset classes we have. So some information is only going to be available in the credit market, some information is only going to be available in the equity market. And I think the more we can use models from one place to trade the other, that's definitely a really exciting place to be.